The stock market is one of the greatest ways to build wealth over time. But for beginners, it can be complex and overwhelming. However, with the right knowledge and strategies, anyone, and I mean anyone, can begin investing in stocks and actually unlock the opportunities and potential that it has. So if you've ever wondered, how do people actually build wealth through stocks? Or you've thought to yourself, investing in stocks is actually something associated to or with the rich, then guess what? You're in luck, because in today's video, we're going to be breaking it all down for you. We're going to be looking at what stocks are, the different types of stocks, the risk that you should be aware of before investing in stocks, the terms that you should know as a beginner. Okay, when you hear this thing, then you're going to be aware of it. And also, we're going to be looking at how much you actually need to start investing in your stocks. And guys, I'm so excited for this particular video today because I've got a beautiful, intelligent, eloquent, extraordinary. I mean, she's giving me the side eye right now because she's wondering, is it me she's talking about? But don't worry, guys. When you see and hear this person, you confirm everything I said. So I'll allow her to introduce herself. Hi, Vami.
Hi, Kim.
How you doing?
I'm good. Thank you so much for bringing me on the show.
Thank you so much for obliging. I love having you here, by the way.
Yeah.
Okay, so like I said, the question is, we've been hearing stocks, and so many people have been wondering, okay, what exactly is the stock? And I, as an individual, it actually got my curiosity piqued, and I'm like, okay, I'm really interested in this. I really want to know what this is. So that's why I'm actually really excited and interested in today's video, because we get to learn and actually walk through this stock thing.
Yeah, we're all learning. Like, I feel like stocks are so much deeper than we think. People just think like stocks, oh, it's hard, it's this, it's that. But all the energy that we put into any other thing in our lives, if we even put in half of that energy into the stock market, we'll be making so much money. Because there's literally so much money just laying on the table. Like, I don't know if you watched The Wolf of Wall Street and you see how they absolutely lose their just trying to close these shares, trying to sell these market shares. Like, that's real life. All of that is still going on today. You just need to find the right tools, follow the right people, and find a way to penetrate and find your own way. Everybody's method is not going to work for you.
Sure.
Like, you can listen to as many podcasts as you want, but if you don't do enough research and read and go through the material deeply, you'll never really understand.
That's actually very profound. And I know you're wondering, okay, what's the stock that we're talking about? Simply put, a stock is actually a share of ownership in a company. So when you buy a stock, you're actually buying a share of that company. So the idea is when a company makes their first public offering, that's actually when they're saying, okay, publics and individuals out there, you have access to buy into our shares and own a part of our company. So when you actually buy that shares that they put out there, that's actually you buying a stock and owning a stock. Say, think of a company like a pizza, yeah, or pizza. When you buy a share, you're actually buying a slice of that pizza. And the more slices you buy, I mean, the bigger your share, the bigger your ownership in that company. And here's actually where it gets interesting. The more tastier and bigger your pizza gets, that is the more profits the company makes, and the bigger the company gets, that's actually the more valuable your stocks become, guys. It's actually really, really, really exciting. And what's beautiful is the company could actually decide to share with you extra toppings. We're going to call these toppings dividends, but we'll get right into this as we go. So now that'll take us to our next segment, which is the types of stocks that we have. Because I mean, I can't do a $10 level of stock at this moment.
Of course, but there are different types of stocks to cater for different needs. I mean, we have the common stocks. That's the stock for our regular businesses all over Nigeria. GT has a stock, Zenith has a stock. Every institution that has gone public has a stock, and you can literally be a piece of this, and they keep you updated with all their information. They tell you what's going on with them when you buy a stock from them. So we also have dividend stock. That's kind of when the company makes profits and they decide to share these profits with their their users, their followers, the people that own stock with them. So they share a piece of their profit, like profit sharing, but like on a larger scale because it's the company. Let's say, okay, you buy Coca-Cola stock and Coca-Cola makes 20% profit this year. They share that entire dividend with everybody that bought a piece of Coca-Cola.
So that dividend that they share with us, do we get to withdraw it when we like, or you could decide to leave it?
You can withdraw it when you like, or you could decide to leave it. But for me, compounding is always best.
Like don't go in to cash out.
Just leave it there. It will grow. It will grow. It's like a little baby. You pamper it, you pamper it. Next thing you know, she's an adult.
Someone said something to me about stock, and then the person says stock is just putting money somewhere and forgetting about it.
Yeah.
Like literally, you just put it and you're like, yo, I'm gonna come back in the next 10 years. Yeah. So it's not something you actually put in and you're like, I need this money to go shop or whatever. It's long term.
That's why sometimes I saw this post on TikTok where the person was like, even if your family members have passed away and they own shares or stock, it's not gone. There's a way to claim it. Yeah.
What if they didn't tell me about it before they died?
Exactly, and you never have a clue. So I just feel like there's a lot of untapped energy in there that we can all tap into. Those are not the only kind of stocks that we have. We still have preferred stocks.
Yeah, I've heard.
We have blue. Would you like to tell me about that?
Okay, so from what I read about preferred stock, I read that, it's sort of like a mix between a stock and a bid. So the idea is maybe you borrow a government or you borrow a company money to start up or do any project really. And then they tell you like, okay, there's an IOU that actually states that, we're going to be paying you this particular profits for this particular period of time until maybe they say they'll pay you that profit for a year. And then once the year ends, that's the end of it. And I think I also learned that the difference between the common and the dividend stock is and the preferred stock rather, is for a preferred stockholder, you would always get something when the company makes a profit. But if you're a common stockholder, it depends on the company's intuition. If they decide
to share their profits,
Oh, that works.
Yeah, a lot of companies like to just keep it under the wraps. They don't want everybody to know what they're doing. Some people do not like to share their profits, and that's fine. But then if you want to go for one way to share your profits and share it on time, you can just opt into the one that best works for you.
Yeah, and I know there's growth stock. Yeah. It's actually for companies who are doing really well, and then they just decide to invest their profits back into the business to make it grow and to just boom, and they just keep investing. And I also learned that it is high yielding, but it has high risk also.
Yes, of course.
You make money, but then the money could go at any point.
Yeah, that's the thing. You have to also weigh in your risk appetite.
Okay.
Like, how much are you willing to lose? That's literally the difference between the poor man and the rich man. Because now, a man that is rich, he's seen millions and he wants to buy a stock. He sees that the stock market is looking good and he's like, okay, I only have like 2 million in his spending account right now. That rich man can spend the entire 2 million on that stock because he knows the value of it. But you that you haven't started before, you already have this mindset like, oh my God, what if I lose my small 100K? And that's just like 100K compared to anything. So you have to be able to, I'm not saying risk more than you can take. I'm saying engage your own appetite and just put it there so you can leave it. Not the one that's giving you more hypertension or more stress. Just gauge what you can let go of and leave it to grow. It will do all the work for you. You don't have to worry about it. But if you now put more than you can give and then you now stress over it, the timing might not be perfect. Like, you might miss out on things, you might lose a lot. You just have to be patient.
I like the question, how much are you willing to lose? Now, this is like, how much am I looking to gain or get? It's like you have to get the delusional aspect out of your head. Like, how much am I willing to lose? And then you actually put that in. Okay, now, speaking about losing, I know there are certain risks involved in stock. Because see, like everything in life, stock is a 50-50 thing. It's a gamble. So I know there are risks involved, and I feel like every beginner, they want to be aware of the risk. So maybe we could just talk about a few of the risks that we know we actually have.
Okay, so like the company.
Okay.
So the company that you're buying shares in, you need to follow them up. You need to know exactly what they're doing. How are they doing? What's in the news about them? What are their employees saying about them? What are their stakeholders saying about them? Like, is the news about them like good? That's how you gauge that. That's how you gauge that risk, because the company like face is important in stocks, because you see stocks that they're doing like so well today, tomorrow a little miscommunication from the press or anything and their stock value reduces. So you always have to follow up on the company and know the kind of company that you're following up on and what they do and how it's running for them. Then you also have to check the volatility of the markets. Is it high risk? Is it low risk? Is the market always changing? Like crypto is a very volatile market. You never know what's gonna happen, and it's not like any of these crypto currencies have a shop somewhere or a website somewhere that you can go check what's happening with them. No, everything is strictly online. So that's a very risky one. You have to watch clearly, know what you're looking at, even like follow the charts. A second can cost you $10,000 and you're just like sad.
So I know there's this emotional risk that I've actually heard about, and it's mostly common with beginners. Like you actually said that a rich man can invest his 2 million naira and nothing happens. But then for beginners, I mean, we literally had to scrunch to put in that particular amount. So I learned that there's something called emotional risk where you see, okay, maybe the market is going down and then you panic and you're like, oh my God, my 50K. And then probably the 50K had increased to maybe 150 and you're like, see, this double, it's fine. So that's something.
Yes, that is something. You have to learn how to control your emotions, because our emotions get the best of us. Our emotions lead us to make... A lot of people are led by their emotions, so you have to be logical in the markets. Okay, this money has gotten to this point. You can do more. Like, how is the company doing? What are other people saying about it? How did it come this far? Of course, you can just leave it. That thing you said at the first place, like, leave it there and forget about it. I'm not saying forget about it completely, but let it compound. Let it pile up, let it stock up. Like literally, like it will keep growing. It will keep growing. Okay. Except there's bad info on the news about it and you feel like it's a bad time. And honestly, that's why you follow a lot of broker pages or a lot of account managers, people that can give you the information you need to know on the kind of stocks that you buy.
So basically, everything you said now, I'm realizing if I decide to be a stockholder, I need to get my stalker vibe on, because you're gonna stalk
everybody.
Like it gets Joe in you literally have to
like,
and be like
we are binoculars following them everywhere. You need to see every little detail. And the worst part is I realized that some of the best companies to buy stocks in, you never really heard of them. Like
low key.
Like Nairametrics dropped the list earlier this year about the top 10 best performing stocks, and I knew only about 3. So I'm not saying like that the stocks that we know, like your GT Bank, Sterling just dropped, they just dropped a new one. You have the Stanbic EFT 30, ETF 30.
So basically you have to do a lot of research.
Yes, because those ones that you now research and you find the low-key ones, they do very well.
But then you have to have like mad foresights to be like, okay, I'm gonna... As a beginner, you may not want to use your own intuition. You just want to do, okay, what this person tells me to do.
Yeah, I think you should also change the mindset. I think the beginner mindset is also something you have to work on, because people say, when you have something that you want to become, you have to start acting like that thing. You have to start moving like that thing. You have to think about the person that you want to become, and you have to move like her. You have to think like her. You have to act like her. You have to speak like her. So that person you're trying to become takes this risk. She's the person that takes risks. She's the person that takes charge of her life.
Like an alter ego.
Yes.
Different personality from the regular you.
Yes. Like, she's the person that can make things happen. She's the person that believes in herself. And, she's done all this research and she knows this thing is going to work, so she's going to give it a try.
And if it doesn't work, try again. If it doesn't work, you try again. So guys, we're going to talk about this until we actually get into the stock business, because it's not just for the rich. It's not just for the Otedoles. It's not just for the Dangotes. It's for everybody. We can all get into this and actually build our wealth. And like you said, I mean, it's not something you do to get money immediately. It's actually something you do to build wealth over time. So catch us in our next video where we're going to be diving more in-depthly into stock markets, how to actually make your first investment. So guys, we love you and we'll see you in our next video. Bye.
Bye. Hello guys, this is the Money Talk Show. If you enjoyed this episode, like, share, and subscribe.